Grant Williams, welcome to Hidden Forces.
Man, thanks for having me. This is a real pleasure.
I was telling you, I'm nervous to have you on, man. You're
an idiot then.
Yeah.
What the hell's wrong with you?
You're an amazing interviewer. You're amazing. I was telling you before we started that watching your Realvision interviews makes me feel poor.
Well, that's very kind of you. Completely unnecessary.
For those who have
deluded, but
for those who haven't watched Realvision, I want you to tell them what it is. But you've been doing it for a while, but now these like interviews have become these like epic things with sweeping shots and drone shots, and like you like on some like cliff looking over some majestic scene, thinking, contemplating, and then you find yourself in some like gorgeous idyllic home or landscape, and you're talking for a full hour, a full day with these people, right? And you're like editing it afterwards. Yeah,
we try and keep the editing to a minimum. I mean, we fight every time because I just want to leave it all in there. I mean, it's just, to me, it's just such fascinating stuff. But we're conscious of people's time, and so we try and get them down to. I mean, these are 90 minutes minimum, really, and 90 minutes to. One of them ran 2.5 hours. We split it into 2 parts. But you know what? I've had more feedback from that interview with a guy called Tony Deeden in Switzerland than any other interview. People have watched it 4 or 5 times. 2.5 hour interview, and they've watched it 4 or 5 times. So, I think when you give people a chance, as you do on this show, to sit down and really talk, it's amazing the kind of stuff you get out of it.
Yeah, well, you and I are both in the same camp on that in terms of believing that people there is an unserved demographic of people who are hungry for real quality stuff, and not just like simple trade ideas or whatever else, but like actually like and you actually said that in one of your most recent interviews. I think you made that point, which was, I forget who it was with, maybe it was William White, which I was also telling you, amazing.
Yeah, he's a lovely man and just such a great mind.
Brilliant. All right, so we'll get through all that because there's so many things I want to talk to you about. But I realized, Grant, when I was preparing this, also for our audience, these are the rundowns. I'm actually showing the television audience. This is baby Grant here on the top left. I got this. It's a family heirloom. It's a picture. It was sent as part of my research. But I realized that I don't know how you got your start. I don't know. I mean, other than that you're from England, I don't know much about you. And our paths have crossed a few times over the years, but we haven't spent too much time together. So catch us up a little bit on who Grant Williams is.
Well, I mean, I'm not sure how interesting that's going to be. We'll try and get through it fairly quickly. But I've been in finance for 35 years now, which is kind of terrifying. And I started in the UK in the mid 80s, straight out of school. I had the opportunity to go to college and study history, which I ummed and ahed about. But I also had an offer of a job, not a great job, but a job one partition wall away from what I wanted to do, which is be on a trading desk, and I ended up taking the job. And you could do that back then. You didn't need a college degree, particularly in the UK, to get a job.
When was this?
This was 85. And so, I found myself in close proximity to the job I wanted to do, but just frustratingly out of reach. I'm just checking telexes and doing all this stuff that I'm just looking straight past it.
Was that hard for you, seeing it and wanting it and not being able to have it at the time?
Yeah, but I realized I didn't know anything about it, right?
You understood
it was what
you were
I wanted
young.
to do. Yeah, I was 18 at the time, right? I was a kid. But I really did want to do this, and the guy that ran the trading floor was a guy called John Galvanoni, who was a legend in the London markets, and a real character, an old school 80s character. Loud, smoked cigars in the office, drank at lunchtime. Made inappropriate comments to everybody. He was an old school, and he was great, right? But
he wouldn't survive today.
Forget it.
It's like bringing a T-Rex back.
But a great trader, great trader. And so I spent 3 months getting in to the office at 5 o'clock in the morning, waiting for him in reception, and just saying every morning, "Hey John, have you got a job for me today?" And he spent a month breezing past me, ignoring me, and then after a month he said, "What's your name, son?" And then after that he'd say, "Morning, my name," and walk past it. And one day after 3 months, a whole bunch of people left, and spots opened up, and I was there, and they knew I was hungry, and they gave me a slot, and it was a big break for me, and I grabbed it, and I wasn't about to let it go. And we were lucky. We were trading the Japanese markets, which just went up every day, so it wasn't difficult to learn how to trade a bull market.
89.
Yeah, right. But this was 86. So we had 3 years of a bull market. I went to Tokyo. I spent 3 years in Tokyo trading the Nikkei right through the blow off, and then the first year and a half of
You were in Tokyo for that.
Yeah, I was in
Wow.
Tokyo for that. 22 years old, no clue, what the hell I was doing, but learning something every day. And I was surrounded by really smart people, which was great. And so that's kind of how I got my start. And the job has carried me all over the world ever since. And I've been happy to go wherever the job's led me. And I've had some amazing experiences. But to kind of tie it into Realvision, I've met so many brilliant people all around the world, and I've sat for hours listening to them, not talking. I just want to listen and pick up what people are thinking. And when Raoul and I sat down for dinner and kicked this idea around back in 2013, I think it was. This was our premise, that we know these people are out there. They're all over the world, and they're brilliant, and they will talk about finance till the cows come home, and you'll never step up from a table not having learned something, or not having figured something out, or found something that makes you want to go away and learn more about it. And that was kind of the genesis of the idea that we had.
So let's take a step back before there, because you were writing things that make you go,
I was, yes.
Right?
I was.
So that's actually the name of the blog. I think you founded that in 2009?
That's right, yeah, 2009.
And I had started seeing those articles on Zero Hedge, most likely, was where I saw them. How did the idea to write that come together? And in fact, I should also ask you, I assume you were writing before that, probably internally, letters?
No, I wasn't. I really wasn't. I through a whole bunch of circumstances, I found myself for the first time in what at that point was a 25-year career with a sales job, which I'd never had before. I'd always been a trader, and I ended up doing a sales trading role and had no idea how to do it. Having abused sales traders my entire career for not doing anything, I suddenly found out how difficult the job is, and so I wanted to be of value to the people I was talking to, and I was fortunate from my days in the trading industry. I knew a lot of the clients and had a relationship with them, so I could talk to them and ask them questions. And those questions were basically around, how do I add value to you? And they get 35 morning rundowns and they get 35 afternoon wrap-ups, and they read one of them. I sent them all a questionnaire to figure out how this whole thing worked. And at the time, the financial media, the financial blogosphere was kind of young. There wasn't much out there.
This is what year?
This is 09.
09.
It doesn't sound so long ago, but it really wasn't. The
it
old
was super
zero.
young.
You remember the first Zero Hedge site, which is like a WordPress site.
Yeah.
So I used to go around and dig around and read all this stuff, and so I started to put together something for these guys that was stuff that they weren't going to find on the WallStreetJournal.com and NewYorkTimes.com and the Post, and it was just stuff that I thought, this is interesting, and here's why you should care about it. And so I started sending that note to people, and it just one of those things that struck a chord, and people gravitated towards it, and they kind of helped me build it, which was a surprise to me, frankly, but a very welcome one.
So much has changed, right? When I got back into this media game or whatever in 2016, pretty much, I thought my Twitter handle, which used to be a very effective tool for promoting Capital Account and just interacting with people, I found it was useless. I wasn't able to get the reach that I was before, and I think part of that was a change in the algorithm. It used to just be a straight feed, right? That changed, and also I realized the way I used to sort of try to get the program out was to reach out to Zero Hedge, or to reach out to some of these other blogs and spread it out there, because all these different blogs had influence. Then I realized that really wasn't happening anymore.
Yeah.
That had changed, and Facebook had really taken over. So the landscape had changed, but back then the blogs were really powerful, and if there were
really
certain and if you had a way to reach people through that, and also Twitter was brand new and it was amazing in a way that it just isn't the same way now, right? Yeah,
it's become much more of a jungle. It was easier to navigate back then, and it wasn't as sprawling. You didn't have to look too far to find interesting stuff. But you're right. The blogs were incredibly powerful then, and it was they were desperate for material, and so it was great to get picked up by some of these guys and have your stuff out there. It was just kind of cool, to see.
And it was a certain brand of material. It was basically the financial counterculture.
Yeah, exactly right.
And there were it's like a series of concentric circles, the way I would think about it. You had gold bugs, you had libertarians, you had people that were concerned with the lack of savings in the United States, people that were concerned over the debt, people that are concerned over inflation. You had all these different groups.
Everybody's concerned about something.
Everyone's concerned about something. Everyone's there was a strong whiff of pessimism. I wouldn't even call it a whiff. There was a strong just odor of pessimism in the air. And all these sort of intersecting concentric circles created this milieu, or whatever you want to call it, where people were congregating online, that has also changed. Like that culture has, there's crypto has also come into it, which didn't exist before. So all that stuff has changed. It's just very interesting.
Yeah, no, look, you're absolutely right. The whole thing has changed, and it's funny because now those kind of disenfranchised groups you spoke about, to me, they seem even more so because the narrative has come together. This positive narrative that, look, we as human beings, we're optimistic people by nature, so the overall narrative is always going to be popular. It's always going to be about markets going up. And so I think the more Twitter reinforces that and the more Facebook reinforces that, the more disenfranchised the kind of pessimists, and I count myself firmly among them, the more disenfranchised they feel. And it's been a very, very interesting dynamic to watch. And as, to your point earlier, we've seen some really smart people make names for themselves and be able, not just for them to be able to reach an audience, but for people to find them where they never would have been able to do that before Twitter, for example.
How do you feel like it's changed since that time, since, I guess, between 2008 or 2009 and 2012?
It's got a lot noisier. It's noisy. It used to be reasonably easy. If you were creating good content, it would find people. It would get out there and it would find people because A, there weren't that many people looking for it, and B, you weren't competing with so many people. But now everybody has a blog, right? Everyone has a blog, and so the quality has to be really good to reach an audience, and then you have to be lucky and you have to get the right guy tweets something out. There's a lot more happenstance to it now, which I don't think there was back in 2009. If you had quality content, you could feel pretty confident that you'd find an audience. But now that we're all swamped with information and trying to shoehorn your way into people's already busy lives and steal some of that time away from them, it's a big ask. It really is. Make no mistake about it.
The Bears have also taken a big beating.
Yeah. Well,
Big
not even a
beating.
beating, just a consistent slap around the face like every day for years.
Exactly.
Yeah.
It's been brutal. And a lot of people, I was at a Jim Grant's conference a few years ago when Stanley Drunken Miller was there, and he made the point that he is just one example of a number of really brilliant investors that just had to close the fund.
Yeah.
Because they couldn't figure out how to make money in this market.
Well, what's interesting when you talk about the Bears, and it is interesting, and I've thought a lot about this lately because I've found myself kind of sucked into the vortex that is the Tesla story, and where you've got bulls and bears on both sides of this argument increasingly heatedly. But the interesting thing about the bears is people assume that bears, if the market goes up, bears lose money. That's not necessarily the case. Over the time, they're not going to make any money, but smart bears, yep, they'll bleed a little bit of money, but they're trying to stay in the game long enough to make the big money when you get an 08 type event or an 87 or a 98 in Asia or whatever it may be. So there's this misunderstanding, and the bears get made fun of, and it's all good sport. I mean, the whole thing. If you think about really boil down what we're all doing, which is trying to make a guess about the future. You're right, you're wrong. How much of it is luck? Well, let's face it, unless you're insider trading, all of it, right? So I find the whole thing kind of funny that people, who's the kid in The Simpsons, Nelson, the ha when you get something wrong, right? It's a guess about the future.
Right.
Like, what are you expecting? But I think the Bears, everyone makes assumptions about the Bears. I know some super smart bears who are great traders and structure their trades so that they bleed a little bit of money here, but it's nothing they can't handle, and they stay in the game and set themselves up for what they think will be a big payday at someday. And I'm sure it'll come. It's a question of whether, like Stan, they just decide, I don't want to do this anymore, and just shut the shop between now and then, which, to your point, is happening more and more.
Mm-hmm. I think there's also an understandable, again, that the term bear is such a catch-all phrase, and it's overused and tired. I think there are a class of investors who have a appreciation for the risk that exists.
Exactly right.
And risk is, by definition, it's very difficult to evaluate it and to prepare yourself for the unexpected events that can occur in financial markets. And because of the environment that we're in today, just mentioning also Williams' White interview earlier, he made the point about we're at a point where where classical models of physics break down, and we're looking at quantum mechanics, and subatomic particles act kind of weird down there.
Right.
And things start getting weird. And it's hard to really understand what the effects of all that would be because it's such an uncharted territory. How do you think about where we are today in financial markets, given the intervention of central banks and governments after '08, and the fact that the debt has grown, debt's continued to grow, and that we have a fiat monetary system that requires ever more debt for ever more growth, right? How do you think about that? Like, what is the sort of, how do you navigate that landscape to actually make money while at the same time not get murdered?
Well, I think that is the question of our time, right? That I mean, in a nutshell, there you boiled it down. That's the question of our time. When you spoke about risk, there, risk used to be a daily exercise, and now risk is some kind of overlay that you have some kind of macro risk, and the risk is essentially transformed from, okay, what are the risks to my portfolio, to my allocations, down to individual stocks. Now the risk is essentially, are the central banks going to keep bailing us out? And if you think they are, just be long. Don't worry about it. When it happens, you'll take a kick. But I think when you ask about this subatomic level, and it's interesting, Bill and I spoke about this idea of negative interest rates. I mean, if we'd had this conversation 20 years ago and we'd been talking about negative interest rates, it would have been a ludicrous conversation. It would have been completely hypothetical. And at the end of it, we'd have said, but of course that can never happen. But right now, today, there's $9.5 trillion of sovereign debt trading at negative interest rates. I mean, you think about that. There was a story in Denmark last year where mortgage companies were paying people who'd taken a mortgage out. It was a small check. People were getting paid, a check from the mortgage company for $30 a month. I mean, if you think about this stuff, it can't happen, right? So your point is well made. There's about things get kind of shady down at the subatomic level, which is where we find ourselves now.
And to further make that point, not only do things get weird objectively, but also your capacity to understand a quantum world is outside of the rubric of the human mind. Like, we can't think about time premiums. We can't think about a world where we actually have to pay someone to take a risk.
No, you're absolutely right. And something I've found when I've talked to so many of these great investors, the really great investors are uncertain, like always. They feel like they don't know what's going on, and I think that's a very healthy attitude to have. It's the guys who are absolutely certain about what's going to happen that tend to get carried out, because that's just not the way the world works. Sometimes to make money, but it's a dangerous thing to do, to be absolutely certain of your convictions. And I've spoken to so many super smart investors. And they all say, look, we have no idea what's going on down here. We have no idea how these negative rates are going to affect things. We have no idea what the rate hikes are going to do. And on the other side, you'll see all these people saying, well, because the Fed's hiking, this is what's going to happen. Here's the roadmap. It's going to work out that way. It's not. I don't know how it's going to work out, but it's definitely not going to work out the way people are absolutely certain it will. And that has a lot to do with where we are, which is below the zero bound. We've been here for 10 years. Things have happened that would have been incomprehensible a decade ago. Everything that's happened since 07, 08 is incomprehensible. We've never been here before. We've never tried this stuff before. So anyone that tells you they know how this story ends is lying to you.
I think one of the least appreciated or spoken about impacts of these types of this rate environment and the QE is the desensitization. That's a word. The way that investors have been desensitized and have sort of lost the skill, lost the smell test.
Yeah.
How big of a factor do you think that is? And let's talk about some of these to sort of follow through on this quantum entanglements. What are some of the other areas of the market? Obviously, emerging markets, corporate debt. There are a number. I mean, you mentioned Tesla. Tesla's been able to finance itself in part because of this. Private placements, huge. I mean, where are you looking at some of these weird areas in the market that have been influenced by these macro trends that we've seen since '08?
Well, look, when you reduce the cost of capital to essentially zero, you affect every single financial transaction that takes place on the planet every day. So if you think you can do that and not screw things up, you're out of your mind, right? So I've as I travel around the world, I pay close attention, and the one thing that I've seen more than anything else is just this massive construction boom everywhere I've gone. I mean, I was in Toronto recently, and I was astonished by the number of cranes in the middle of Toronto, buildings that have been torn down, they're going up. This is what happens when money's free. And you can see, if you've lived through any cycles at all, you know where we are. This is malinvestment, except it's on such an enormous scale now that when this cycle turns, and it will turn, it will happen, it's going to be chaos. I mean, it really will be chaos. And again, everyone's going to look to the Bank of Canada and the central banks and the Fed and the Bank of England and expect them now. Last time it was kind of, well, we're pretty sure we know what they're going to do. This time around, it's going to be, well, they have to step in now because this is going to be a disaster. And that to me is at the root of all this, is that reducing the cost of capital to zero. You have everything that comes on top of that is distorted, and as the further out you get, the bigger the distortions become.
So let's talk about how the environment's a little different than it was in 2008, right? There have been tighter banking regulations, for example, like Dodd-Frank. That's curbed what banks can do in terms of lending, and that's resulted in a lot of the corporates going into the bond market, right, to fund themselves. How have some of those, when you look at the way the landscape has changed in some sort of other areas, where are you looking to see the impact of, let's say, the rate rises, that the rate hikes of the Fed, or the balance sheet unwinding, or a change in sentiment? How would that manifest? Because a lot of people could have certainly seen the mortgage market collapsing in 2008, but they wouldn't necessarily have seen all the systemic impacts, the knock-on effects in derivatives markets and things like that for all the investment banks. What do you think about when you look?
Well, what's happened since the Fed, we saw the taper tantrum, which was the first kind of shot across the bow when they suggested the idea, and the markets really got wobbly. So then they realized that forward guidance was absolutely imperative. So we'll calm the horses and we'll just make sure everyone knows what we're doing. And it's worked pretty well. Then they got around to tightening, and everyone said, well, as soon as they start tightening, the game's over. First hike came. We had a little bit of a wobble in the few months afterwards, but things calmed down. And with every successive hike, you've kind of seen people, kind of hide behind the couch and look up and then, hey, okay, this is still going on. We're still okay. And I really get that sense that people are watching this and thinking, there's a line somewhere. There's a level where this doesn't work. Higher rates have always triggered recessions as we've gone through the cycle. So we know that somewhere out there, is it 3%? Is it 3.5%? Who knows? But somewhere there's a level that this doesn't work anymore. And now we've got everybody. No one can really retreat to the safety of bonds now. So you're in the equity market. Because
why do you say that?
Well, because there's no
the
way
rate,
to get return.
The yield is so low.
The simplest chart I ever put together, and I put up. I was speaking to a group of people in Seattle in 2012, and I put a chart up. It had two bars on it. The first bar was your interest on $10 million invested in 2-year treasuries. You had $10 million. You put it all in 2-year treasuries, completely safe. In 2007, you earned $500,000 a year. 2012, when we were way above where we are now, that went from $500,000 to $13,000. And I put that chart up, put the first bar up first, and then I asked the audience to guess what the return was. And I put it up, and gasps went around the place. And I had someone come up to me afterwards and said, I didn't get it until I saw that chart. This guy spent his entire life building a business, and he said to me, I always swore if I could sell my business for $10 million, I was going to sell it and live like a rich man with a wife and go travel. And he'd done that the year before, put the money in, at the bank or somewhere. And he said, I'm not rich. I'm eating my capital away. My wife and I haven't been able to take the holidays we thought. And it wasn't until I saw that chart that I realized. And that has taken away anyone that doesn't want to play and just says, I don't want to take risk. I've worked my entire life for this. I just want to protect it. That's not really an option anymore.
Right.
And so everyone's kind of in the markets, and we're all watching the hikes to see where that trigger point is. And everyone's thinking, I've got one finger on the sell button because I'm going to get out of this. When I think it's going to go, I'm going to get out. And we've all been herded in both directions. And my fear has been, and I've been flat wrong for like 3 years, right? I'm very happy to say that. I've been flat wrong about what I think is going to happen happening. But I still think at some point it's going to happen, is that when this boat tips and goes the other way, I keep talking about how in a rising market, I can always find you shares for sale. If you want to buy a share 24/7, someone will make you an offer. But when the market turns and you want to bid, oftentimes the bid is zero. Nobody wants to make you a bid. And so I think when we see what we've seen, this trend following momentum, markets just inching up every day, when that shifts and the markets want to go down and they're trying to go down every day, it doesn't work the same way. We don't go down in the same gentle fashion that we've gone up, and I think that's going to spook a lot of people.
I think also the same principle that holds if you're an individual investor and you're leveraged. Leverage allows you to grow fast and and you can collapse very quickly. And I think the same principle holds for the broader market in general. I think that we are in a situation where we could see an extreme reversal, because of the fact that, so you've got, this is sort of a comment about the wealth and income distribution. You've got so many people now that have so much money, and those people, all they care about when they have all that much money and things are going really well is they want to just make more, right? They want to get some yield because they're not able to get anything, so they take bigger and bigger risks, and they're willing to do that because that money is not really more equally distributed. So you've got huge asset price appreciation, right? But then the opposite thing occurs in the reverse, because they're at that point they just need to save as much of that as possible. I just feel like if you had less of a concentration of wealth at the extremes and less leverage, that would be less extreme. Those reversals. Does that make sense?
Yeah, that makes all the sense in the world. I mean, this bifurcation, this 1%, 99%, has become a real problem, and there are countless charts that show the magnitude of this and just how serious it's become. And you can see it, you can feel it walking around the streets. You can feel it. I travel a lot in the US, here in New York, for example. You can just feel it. It's amazing how many people are living on the streets, not just here, but San Francisco and Austin and San Diego and all these places I've traveled to. It's a common problem now, and it's terrible for society. And the policies of the central banks to keep the wheels on the system post 2008 are absolutely responsible for this. The linkage is clear. So it is a problem. It's a big problem, and it's starting to manifest. But I suspect we haven't seen the worst of it yet.
So let's talk about some specific examples. I mean, the one that comes to mind when you're talking is Turkey, because they've recently seen a major, I don't want to say collapse in the lira, but the lira seems to be at a place where it could go into free fall. Right, there seems to be that concern there, and they have a huge current account deficit. They depend on foreign inflows, and they have very precarious political situation because Erdogan's been consolidating power. How much time do you spend thinking about Turkey lately? I know you wrote about it in your newsletter, and how does that fit into all of this?
Well, it's a sign of the disease, right? I mean, if you look at what happened in Turkey, they had massive overinvestment. They had a huge booming construction sector. All of the signs happened. It's ironic that the trigger was a standoff over a priest being taken hostage and tariffs from President Trump against the Turks that kind of triggered this. But the kindling was all there. Everything you just laid out was well known, and it hadn't been a problem. I mean, we could all see that they had all these problems. It just takes something, and you don't know what it is. And once these things get going, the responses that the Turkish central bank and the Ministry of Finance and the president had were limited, and so these things get out of hand very, very quickly. Erdogan did themselves no favors talking about his potential solutions to this. But when there's a
what does he put forward as a solution?
Well, he's told people to sell their dollars and buy the lira, and sell their gold and buy the lira, and the Turks are not selling their gold to help the central bank out because it's the only thing that's kept them solvent. Venezuela's another far more extreme example, of the same thing. And if you owned gold in Turkey or Venezuela as an insurance policy, guess what? It paid out in the last few weeks and months. But Turkey's not an isolated case. This is something that is happening in other Argentina, Brazil. We're seeing these emerging markets. A lot of this is caused by the strength of the dollar, and the dollar is. It's something that everybody needs to be looking at, and everybody needs to think about. There are people that I have just the utmost respect for on both sides of this debate. There are guys who are brilliant who say the dollar is going to go much, much higher, and there are guys who I think are equally brilliant that say it's peaked, it's going to go much, much lower. None of us know.
If you had to pick one person on either side of that argument that you think enunciates the argument as clearly as possible, who would they be?
Well, I'll give you two on the bull side, both dear friends of mine. Raoul Pal, my business partner at Realvision, who has been talking about this for a long time, has done a lot of work on it, and he writes and speaks brilliantly about it. And he's been right and then wrong for a little while and very, very right again. And he's been consistent throughout. Brent Johnson runs Santiago Capital out on the West Coast, another dear friend of mine. And he put something, he did a presentation called the milkshake theory, which I think you'll find, it's certainly on Realvision. I think you may find it online, I'm not sure. Explaining all the forces at work, which are, it's a very, very strong case. And then you've got a guy like Mark Yusko, who runs Morgan Creek, another great friend of mine and a brilliant man who will give you all the evidence you want that the dollar's peaked out and it's going to go lower. I lean towards the fact that because it's such a problem having a strong dollar for so many people that they will have to find a way of managing it down, because if it gets out of hand,
you think the Fed will manage it down because of?
I think the Fed and all the central banks will come together and we'll have some kind of accord put in place. We've seen these before. There's plenty of precedent.
Well, you brought that up to William. That was one of your questions to William White.
Yeah.
And his answer to that was that he thought that the Fed would actually just really, at the end of the day, just focus on the U.S. economy and not really work with the other banks.
Well, and it's
no. I mean, to your point,
but
that there are lots of.
But domestic policy always trumps international policy. When there's two problems to deal with, right, domestic always wins. But I think the Fed has kind of created this problem for people, and it's kind of in their lap now. And if it really gets messy, they should try and help clear it up. Will they? I don't know.
A perfect example, though, that it's not very clear what's in the domestic interest, right? I mean, in the Asian financial crisis, the dollar was very, very strong, and as a result of that, it had snapback effects on U.S. hedge funds and U.S. investment banks,
sure,
right?
Yeah, sure. And look, you look at all the U.S. manufacturing done overseas. We're getting into all these trade tariffs now, so we're starting to see the numbers about how many U.S. jobs are tied to factories in China and tied to the imports that they're bringing back into the country. So it's a very tangled web, this. And so far, no real damage has been done. There's been a bit of tit for tat, and the art of the deal negotiating stance that Trump is using has got him some wins in various places. But look, history is full of examples. Nobody wins in a trade war. There are no winners. And we saw this with Smoot-Hawley in the 30s, and we know what that led to. It led straight to the Great Depression. And I'm not saying that's what's going to happen here, but this, we've been down this road many, many times, and there isn't a happy ending to this. It ends in compromise after a lot of milk gets spilled. And I feel like we're on the edge of that period where the damage gets done and then we have to scramble around and come up with a compromise solution.
Right. Things can get out of hand very quickly.
Very quickly, yeah.
I think that's even more concerning with the Chinese, right? Because the Chinese are such a huge geopolitical force.
Well, this time around, they're a little bit more bellicose. There are things they want now. They're not just kowtowing to the Americans. They feel that they deserve a bigger place on the world stage. And they won't just back down, and they will stand up for things that are important to them. I mean, we haven't really seen that yet. We've seen billions here and billions there, and it's gone backwards and forwards. But we haven't really got to that point where the Chinese are backed into a corner where previously they would have blinked and backed down. It's when we get there and we see if their reaction changes that we'll know how things have changed. And I know a lot of people that know China a lot better than I do, and they all say to me, look, this is not your grandfather's trade dispute. Right. This is a different animal. We haven't seen how different it is yet, but if the Americans keep pushing, then maybe we will. But again, China's so opaque that there are plenty of people that make a great case saying, no, China's in all sorts of trouble. This trade war is the last thing they want. They're going to back down. We don't know. This is a guess about the future, like all this other stuff is. And the reason I do the interviews I do in the way I do is because, to me, I just want to get the best inputs I can on both sides. I want smart people to tell me why I'm right, smart people to tell me why I'm wrong, and I want all that information, and then let me figure out where I come down. But to sit there and say to someone, okay, what's going to happen? And they say, well, China's going to cave, and then you put all your chips on the table on China caving. It's just a foolish thing to do.
By caving, you're talking about caving specifically in the negotiations, or is there also, what about the other possibility that because of their precarious financial situation, the amount of outstanding loans, the amount of debt they've generated, talked about the construction boom, and the pent-up inflation in the yuan, that they might see a sort of political crisis in their own home country, and they have to attend to that, and they really can't get too ambitious on geopolitical stuff.
It's possible. I mean, a political crisis in China is a tough one for me to see happening before we see one in Europe, for example, or even here in the US. President Xi has got China nailed down pretty tight. It would take something extraordinary for him to for his power to weaken. Having said that, the Achilles heel in China is always inflation, food price inflation. That's the thing that really gets people out in the street. So that's the one thing you have to watch. But I just don't see that happening.
But those investments need to pay off, right? Ultimately, I mean, if enough investments don't pay off, that's going to be a headwind on political stability in the country.
Yeah, I don't disagree, but I think they have a degree of control over the people and over the news flow and over what really is the general understanding of the situation. Now, that's why something like food prices you can't spin that. You can't spin the cost of pork going up. You can spin all kinds of other stuff about overseas investment that people aren't really paying attention to. You can shut out Facebook. You can shut out the internet. You can. They've got levers to pull that we in the West just don't have to pull. And so, we don't really know with any certainty what advantage that gives them in the short term and maybe disadvantage in the long term. But they have tools at their disposal that we can't even think about.
Also, the citizenry has a different set of expectations. To your point,
they do, yeah.
And it's difficult to analyze China from a Western perspective, even a Westerner who's lived there. And most of us, I'm sure, have been there often. I have not, and it's one more reason not to really, opine about it.
Well, I think part of the problem is today everybody feels as though they have to have an opinion about it.
Oh yeah, for sure.
You know what I mean?
That's the worst.
It's we don't know about China. It is opaque. There are smart people that live there and will give you an awful lot of inputs to try and make your decision. Right. But just understand, we don't know.
That's a really good point, though, about people offering opinions. And that kind of takes me back to Twitter. One of the things that I've seen lately is there's a certain class of investors who use Twitter a lot. And they share their views on Twitter a lot. Active portfolio managers. Yeah. I can't understand how anyone can do that and that not screw them in terms of make them biased, because you're putting your views out there. And all of a sudden now you're not just thinking about how to balance your portfolio. You're also thinking about how what you said might make you look stupid now.
Yeah.
I don't understand I don't necessarily think that that's a great idea. And that's a great segue, obviously, to Elon Musk and his disastrous use of Twitter. But, the president of the United States uses Twitter. Yeah. Lots of people. It's almost like it's one of those things where everyone's doing it, but that doesn't necessarily make it a good idea. You don't see Warren Buffett on Twitter, and I know it's a generational thing, but you don't see Howard Marks on Twitter. We talked about that before. You don't see these people spending all this time tweeting. How can they spend so much time tweeting? And the classic reason that they give that I've heard is that, well, Twitter allows me to vent my ideas and hear what people have to say and take criticism, but yeah. I don't feel that that's what it is. I feel like it ends up just being a dick-waving contest.
Well, look, I think it offers that. It does offer that ability to put your ideas out there and get people to...
I thought you were going to say dick-waving contest.
Yeah, no. It does give you the ability to vet that, but I think you nailed it earlier on there when you talked about, as soon as you put this thing out there, it's human nature to then defend it. And defend attacks against it, and we find it very difficult to admit we're wrong. And in finance, particularly, as I said to you before, you're asking people to make a guess about an unknowable future. Yeah. And so, if you think about it, saying, you know what, I got it wrong, it should be the easiest thing to do in the world. But sure. We're not wired that way. And so, I think you're right. Once you have an opinion out there on Twitter, it's not that you won't change, but you'll hold on to it longer than you should do.
Well, it depends also on how you're expressing it, right? Like someone like you doesn't do that. Like you,
no,
that's not your style. That's not your style. No, it's not your style at all. And and also, there's. I think I assume, Grant, you come from the perspective of, I'm constantly looking to disprove my hypothesis, right? I mean, isn't that what you're constantly trying to do?
Always. I mean, if you're not doing that, you're out of your mind.
If you're not doing that, you're more likely to lose money.
Yeah.
You should be constantly trying to figure out where you're wrong.
Yeah.
Right. So I mean, I think that's the thing, and that also concerns me in terms of talking about overvaluations and bubbles, I've met so many investors and so many portfolio managers who say some things that don't make any sense.
Mm-hmm.
And we can talk about that with Tesla, and we can talk about that with cryptocurrencies, right? These
Sure.
are two areas, tech stocks in general. But let's talk a little bit about Tesla, because this is one place where you see this crazy, you mentioned it before, this like this polarization. You've got the what do they call it?
Teslarians.
Teslarians.
There's all kinds of
Teslemmings is
names
the
for it.
derogatory term,
Yeah,
right? Teslarians, and then you've got like the Mark Spiegels who like you know they bang each other. They drive chicken right into each other every day on Twitter. Oh, by the way, I'll say one thing. There is one person who I remember used Twitter so effectively back in the day, and that was Joe Weisenthal. Joe was back then, he was the editor of Business Insider. I don't know if you remember how he used it, but he would write up an article, and then he would troll the shit out of the community. So it was like a gold.
Yeah.
It was like a gold article. He'd say some insane title. He'd put it on Twitter, and then he'd just say something, and then they'd fucking go crazy. And he loved it, and he would just literally just like, you know, it was just cranking the money lever. It was genius. He was so good at it, so he used it to his benefit. But most people, I feel like they just get sucked into arguments, and they get themselves in more trouble, like our friend Elon Musk.
Well, look, I mean, this is a whole other podcast. The Tesla story, I had to say, for me, it's the most fascinating thing I've seen in 35 odd years in the securities markets. It really is. It's such a poster child for the situation we find ourselves in. This company, if money wasn't free, this company would not exist. If we didn't all have these lofty ideals about making the world a better place and selling a dream of colonizing Mars and going from San Francisco to Los Angeles in 5 minutes underground.
Absolutely.
These are dreams, and it's great to have dreams. It's great to have dreams, but when you are spending other people's money on those dreams, there's a line. But let's put the moral side of it aside and just look at the company. It's remarkable to me, and I'm fascinated by it. It's the first thing I look at in the morning when I wake up, the Tesla Twitter, because it's
Tesla or Elon's.
No, well, it all comes in there. Trust me. But what's interesting is you've got bulls and bears, and they're, I mean, so far apart. It's actually getting pretty nasty now, which is a shame, because at the end of the day,
it is nasty.
It doesn't need to get nasty.
It is
right?
a shame. I agree with you.
It is a shame.
That also is something, and not just sorry to interrupt this to make the point, but this is a phenomenon across the country, and I think it's awful. And it doesn't serve us well.
But if you want to see it in all its glory, Tesla is where you go, and it is a shame. But what I've noticed as I've looked is that the bears in the Tesla community are not all, but almost all hardcore finance guys.
Value investors.
Right, they're value investors. They've been through cycles. They've watched Enron. They've watched these big WorldCom, and they've watched Theranos, and they understand how these things happen. And on the bull side, you've got a lot of people who are either individual investors, or they're fans of Elon, or they've bought into the dream, and so I don't want to say the quality of the argument is skewed heavily in favor of the bears, but the rigidity of the argument. And we did a piece on the Realvision podcast about a year ago about Tesla, and I got Mark Spiegel, who you mentioned before, to come on. And Mark's a great guy. He's a money manager. He's funny as hell. He does a lot of work. He really understands the company, and he's just great entertainment. And we had Mark on, and we talked about Tesla, and he took the thing apart. And I said, look, at the end of the episode, we don't pick sides. So we've done the anti-Tesla case, and I'm now throwing the mic up. We had 60,000 odd people listening to this podcast. Email me, and if you want to come on and put the other side, the mic's yours. This is totally fair. And I put that request out 5-6 weeks in a row, and I had a bunch of emails come through, and I spoke to people, and I talked to them over the phone. I emailed them, and everybody I found, once you drill down through the argument, you eventually get to, well, Elon's going to figure that out. You've got to trust Elon.
Jeff Bezos did it.
Right. Yeah,
that's another one.
But it was more of a we're back in Elon, not Tesla. And I said to these guys, and I spent a long time talking to them. I said, look, I can't put you on because, one, you'll get shredded by finance guys that will pick your arguments apart. And two, I don't want to make it look like I'm stacking the deck by putting a weak bull case. I want I really, really do want someone to make me think, this thing's going up. But I just couldn't find that guy.
What do you think's going on? Like, in all seriousness, because we see this with cryptocurrencies also. Part of it, I don't know how much of it is this, but I want to float it out to you. Some of these, I mean, Tesla's not that complicated. I mean, cryptocurrencies are more complicated, but we've had a tech bubble in the past. Mm-hmm. We've had other technologies that were beyond the scope of what the average investor could understand. There were maybe people were doing it during the tech bubble, but there seems to be this willingness to just say it's simple. It's this simple. Elon will just figure it out. I'm smart. I can buy an overvalued stock and still make money as it gets even more valued because people don't understand that this is the Messiah.
Right.
Elon Musk is the Messiah, right? And you had it even with Theranos in a different way, where you had all these investors get suckered in to this girl who didn't even have a medical degree and was claiming to do things that any hematologist would tell you were impossible. So is this a more extreme case of, I think you referred to it in your newsletter as denying or
denial, yeah.
Denialism. Is this more extreme than it used to be?
I think it is. I think it is, and I think a lot of that is the culture we live in has developed in such a way that celebrities are very easy to build up, and they're very easy to worship, and it's very easy to create this persona that looks great on Instagram, and you control the PR very carefully, and you can create these personalities for yourself that are very seductive to people that are looking for either a bit of light in a dark world or someone who's got big dreams like them. It's not that difficult to do, sadly, and the cryptocurrency space. And again, this is another subject that I have great friends who are brilliant on both sides. Some will say it's going to zero, some will say it's going to $1 million. And they both make very persuasive arguments. And I think this is another example. The difference has been, particularly in Bitcoin back in 2017 when we saw this crazy run-up, is that you don't even need to open an account with Charles Schwab to get into the Bitcoin market, right? You can do it on your phone. And so people have been sucked into that in a way that dwarfs what happens in stock bubble manias, when you've got to go to and fill your paperwork in, your KYC, and open a stock account, and then wait and then fund it and do all that sort of stuff before you buy your shares. Now you can do it on your phone, and at least back then you could. It's much, much simpler. And so people are jumping in at all the wrong points, as always happens. You and I know we're in financial markets. It's the retail guys that always come in too late and always end up losing money. And you could see this at the end of 2017. Except it was the
retail guys that got in first in crypto.
Yeah, well, yeah. I mean, it was, but these were smart. Let's call them the retail geeks.
A lot of people weren't smart, made a lot of money. Actually, I heard a case about this. Some guy was buying drugs on the Silk Road. He was so, I guess, fucked up, he forgot his password or whatever, and his key, and he ended up like having a wallet with millions of dollars. He became a millionaire because he just forgot the.
Yeah. No, well, that's
but
true.
To your,
but it's the people
yes,
that bought them on their
with
credit card and sold their house to buy Bitcoin, which you read all
Right.
the newspapers in December 17. We're not reading about those people now, which is another interesting phenomenon if you think about it. The stories were great when they were all positive and everyone's making money, and but where's the interview with the guy that sold his house and mortgaged it and bought Bitcoin with it, or
right?
We're not seeing those. So that it's interesting to me that those stories, those cautionary tales, we haven't seen them.
Is there anything that's comparable to what you've seen here with cryptocurrencies? Anything that, let's say, like in the 90s boom?
Look, I don't think so, because the Japanese equity market boom was my first bubble, but it was a stock market bubble. We've seen them before. It was just share prices going up. Everybody knows what stocks and shares are. Everyone knew the Japan story. Everyone understood the Japan story. Bitcoin is different. Bitcoin is there's a leap in terms of the knowledge you need to really understand it, and you have to commit to maintaining that understanding, because it's constantly changing, constantly evolving. So if you really think you've got a handle on Bitcoin now, and I took you somewhere and gave you no internet for a month and brought you back in there, be unrecognizable.
So when you talk about cryptocurrencies, tell me, like, let's take a step back and tell me what is it that you call cryptocurrency, and what do you understand about this market? How are you approaching it, and what is it to you?
Well, I had some Bitcoin. I sold them far too early. I made decent money, and I sold them far too early. The idea of decentralized third triple entry bookkeeping is, to me, game changing. But I don't know how that becomes a real world solution. And I understand the arguments as to why a place on the blockchain is going to be incredibly valuable. And I understand the arguments as to why they're going to zero. I understand both of them. If it's a case of pick a side, for me, you know what, I don't want to pick a side right now. If I get to a point where I'm more confident in one outcome or the other, I'll pick a side. But right now, I can see both arguments coming true. I can see it going to zero. I can see these things going extremely high. But I'm not seeing the kind of impetus behind them that they would need to have another run like we saw in 2017.
Right. Well, also, again, to bring us back, the cryptocurrencies are the classic case where there are just ideological adherence, and Bitcoin in particular. I mean, it's like gold on steroids.
Yeah, absolutely right.
Right. But what are the arguments that you hear, and is it just Bitcoin that you look at, or have you spent any time looking at blockchain? And then even further, have you spent any time looking at the whole suite of distributed ledger technologies that basically build permissionless databases?
I've looked at this stuff on a very perfunctory basis, and I've got a lot of people I know who've done a lot of work on this, and so I talk to them and get their understanding of it.
Have any of them told you that blockchain is inherently incapable of scaling? That it has scaling limitations that make it unworkable. That it won't work simply because it just won't be able to scale.
Well, no, generally speaking, the unworkable side of it just becomes these things. The whole thing is just air, and it's gonna collapse because people are gonna lose faith in it, and down it's gonna go. And from the wreckage, does something come? Yeah, it probably does, but people aren't interested in that. Nobody wants to buy a blockchain that's going to grow really slowly over the next 50 years, right? They all want to be gajillionaires next week. So, for me, I don't have time to do the reading on blockchain that I feel I need to be able to invest in it properly. I just don't have the time. And so, I've got people that I trust on both sides of the argument, and I talk to them regularly just to understand what's happening. But to me, investing in blockchain right now is I'm playing at such a disadvantage to the guys that really understand the technology that it's not worth it to me right now.
The other problem that this in space has is that there are so many people that have, particularly the most sort of egregious cases I found are crypto fund managers, people that have access to lots of money, have raised a lot of money, and either they're being slightly or very dishonest, or primarily about what they know and what they understand. Because like this technology is so complicated, and you're talking about some of the stuff is like hardcore cryptography. Almost everyone has to take certain aspects of it on faith. But if you're taking someone else's money, you have to have the answers, right?
Well, or you have to know a guy who does, right? You have to employ a guy who does. And I think that's the thing. That's why, to me, I know what I don't know, and I know I don't understand Bitcoin to the level that the other people who trade this thing in and out all day understand it. And so I don't want to play on those playing fields. But I think the potential to make money in Bitcoin is clear. The potential for disruption and change is clear. And so therefore the potential to be ahead of game-changing technology is very appealing to people. And as I said, though, I've got good friends who I've got a lot of time for and a great respect for, who are doing exactly what you're talking about. They're trying to set up crypto funds. They're raising money to invest in cryptocurrencies. The difference comes between the guys doing the work in understanding it and the guys doing the work in explaining it to the public. They're not the same people, right? Because they can't be.
No, I mean, look. So I've spent a good deal of time researching this in terms of people from the space. I've had Joe Lubin on. I've had Vitalik and Vlad on. I've had a number of people on, and most of that started because of some early coverage I did of Hedera Hashgraph, which was a non-blockchain technology. And what I have ultimately come away with is it's not, at least blockchain doesn't, the conversations that I have around blockchain just don't feel satisfying. The answers just don't feel sufficient, right? For the level of hype and the level of investment and the amount of money that's being taken by investors, it just doesn't feel like it's enough. So I am, I don't talk about this ever on the show. I don't sort of, because I can always be wrong, and what the hell do I know? But I tend to be generally bearish. That doesn't mean that I don't think I'm an investor in Hashgraph. I actually am very bullish on its technology, and I happen to think that there are a number, and I'm an investor and also in another stable coin. I think that some of those have an opportunity, but I think they have opportunities for very different reasons, and I think that the vast majority of these applications that are being supposedly built on top of blockchain, I think that the jury's out about whether they're going to be able to actually run those applications on a permissionless database that uses a database architecture like blockchain.
Well, that's it. That's exactly. We don't know, right? This is, again, I mean, there's nothing more about the future than blockchain. I mean, blockchain is this unknowable future that we've talked about several times in this conversation. Bitcoin is the epitome of that, because not only is the future unknowable, but to most people, the present is unknowable as well, because it requires so much time invested to really understand the technology. But again, it's something that everyone feels compelled to have an opinion on. You know, I choose just not to be involved because I just don't know. I don't know if it's going to go to $1 million. I don't know if it's going to go to zero.
So let's talk about some tech stocks that you might have an opinion on, like Facebook.
Yeah, I've written a lot about this. I wrote about it from the angle of the advertising agencies starting to struggle. This was a year ago, and WPP had some poor results. And if you look at the ad spending as it goes through Facebook, I joined Facebook years ago to spy on my kids. Basically, that's basically it. And I got rid of it a number of years ago because I just found it was a detriment to my life. Sucking away time, and I just don't see the value in it. I've never clicked on an advert. I've never clicked on anything on there. It drove me nuts in the end.
You never downloaded Farmville?
No. Well, my youngest daughter did. God love her. She's probably cursing that now because she was probably 12 at the time, and now she's 21. She would hate that. So I think Facebook has got material problems, and I think it's a mood shift. And these companies are so predicated on mood, and we've seen that subtle shift with Facebook. It doesn't sound apropos, but if you think about what happened to MySpace, it wasn't cool anymore. When Facebook came along, away it went. Facebook's desperately clinging on to that, but the problems they've got with the data and the GDPR and the taxes and all the rule makers going after them everywhere, they're going to struggle, I think. I really think they're going to struggle. And it's funny how people talk about Facebook now, for the most part, I find, in a derogatory fashion. People, as the Aussies say, it's on the nose. Facebook is on the nose now. People are like, oh, you still use Facebook? I don't like them. I don't like this. And we didn't see anything the first quarter, and then we saw obviously these numbers come out with a slight lag, and the stock fell 20%. And I think there's going to be more of that to come.
How much do you think that is actually, like, I think you're alluding to it, that there's a shift in social opinion, social mood, the zeitgeist around it.
That's exactly it. It's a mood, and they're all predicated on mood, these sites.
And also, though, the other thing is that there is a heightened awareness by the public around privacy.
Yeah.
Privacy is now becoming a thing that it wasn't before, and also at the same time, we have an increased number of cyber attacks, and that's becoming a much more real threat.
Well, privacy is an interesting thing, because I think for our generations, I won't put you in my generation, you're far too young. Privacy was always a thing. The millennial generation didn't really care. They just wanted free. They didn't care who had what. But now I think, the demographic on Facebook has changed. It's now become an older demographic because the younger kids have moved to Instagram or Snapchat or Insta Snap or whatever they're called nowadays.
Took a dive also.
Right, took a dive also because Khloe Kardashian said, "Is it just me that finds it lame?" And that was it. 1.8 billion wiped off the market cap. But you've now got an older demographic on Facebook, left on Facebook, who do value privacy, and so I think that's where the genesis of their problems are coming from. If anything's free, it's so easy to ditch. So Instagram, Snapchat, there will be something coming along, or kids will just get bored, or whatever it may be. If you can't make hay when the sun's shining and maximize your gains in these things when you're the hot app, there comes a point where people just lose interest. And I think these companies, fair play to them, have done a fantastic job in maintaining that interest a lot longer than I thought they would. But I think when it starts to go, it's the devil's own job to keep it.
Yeah, but the experience sucks.
You don't know
The experience of using Facebook sucks.
Yeah, it really does.
I don't know anyone that actually likes it. I mean, there are, I'm sure, people, but it's usually political trolls.
Yep.
People that love to troll the shit out of other people's pages. And also, it's so highly curated and it's so manipulated. And I'm going to give you a great example. Last week, I had Jonathan Haidt on the show. While I was reading his book, which is called The Coddling of the American Mind, I put up a link to the Atlantic magazine article that he and... Are we friends on Facebook? Did you see that?
No, I'm not on Facebook, but I've read that article. And I've
okay.
tweeted it 100 times. It's a fantastic article.
Fantastic article. So this is the book. So I was reading the book, and I was like, man, this is incredible. Like, I didn't know about any of this stuff. I don't know if you've looked into this crazy stuff that's happened on college campuses. But like Evergreen, Middlebury, Yale, all sorts of crazy stuff. I was watching these videos. I was like, this is nuts. And I posted a non-political and non-combative post. And I got trolled. And then I put up another one, because at that point I was like, all right, let's just see what's happened. Let's see what's happened. And then I put up another post, which was a link to a Jordan Peterson article in the New Yorker saying that Jordan Peterson has basically been unfairly maligned, and like, why is the left so, like, why are they so quick to attack Jordan Peterson and ascribe to him the worst sort of motivations? And I put this post up, and again, non-political, but I made some sort of open-ended questions. And again, I got trolled. And the next day, in the morning, I get onto Facebook. I get trolled, but so to be clear, I got trolled. I don't normally get trolled.
You're that kind of guy, right? I can understand why people want to troll.
I can be that kind of guy, man. I've gone through phases. But I don't do that. Right, and I don't really post political stuff, and this show doesn't do that. So it was out of character, and I have a lot of left-leaning friends on my Facebook. So I get it the next morning. I go to my computer, I open it up, and Facebook. When I go to log in, Facebook, or I'm already logged out, and Facebook says we think that your account's been hacked. All right, and I'm like, holy shit. I'm like my worst nightmare. I was like, I'm literally like, one of those people that like, I turn my Wi-Fi off when I check my password. I'm like, what if there's a middleman attack? I don't want to be. So I log in, and they start taking me through these steps, and they're like, the reason why I come to realize that they had no clear evidence for why I was hacked. They assumed I was hacked, and they said, we think that someone's posting on your behalf. They assumed I was hacked because I put up 2 articles that got me trolled by some people on the left, and that was out of character for them. And by the way, after the Jordan Peterson article, before this whole thing, I started getting all this really hardcore right-wing sort of advertising stuff. Like there was this guy, like Jack Guy, like standing like in the middle of like some like I don't know what it was. It was clearly like conservative. You know what I mean?
Yeah.
I'm like, this is nuts, and not nuts just because like the algorithm was so stupid that it was like judging me in this stereotypical way, but the fact that it was so quick to do that, and that people live in these bubbles that are being curated by these algorithms, and they're not actually experiencing the nuance of connection and ideas.
But there's ideas are things to be exchanged, right? That's what we're supposed to do with them. And that's gone. You can't exchange ideas anymore. I've believed my entire life that offense is taken, not given. Right? You don't. I mean, I could offend you. It would be obvious I was trying to offend you. But if you infer offense from something I've said, that's on you. That's not on me. I mean,
that's what's called a microaggression. Are you familiar?
I'm fully familiar.
I learned all of
with
this from Jonathan Haidt's book.
I'm fully familiar with this stuff, and to me, it's a true tragedy that this ability to be offended and just kind of say, that offends me and move on, seems to have gone. I grew up in the UK in the sort of 70s and 80s, and it was a society and a culture where taking the piss out of people that's what you did, right? You made fun of people, and you made fun of stereotypes, and you made fun, but it was humor, and that has now been transformed into racism,
right?
And it's a shame. It really, I hope this is just another one of those pendulums that will swing back the other way, because it's so extreme now, and the things people are getting offended about are ludicrous, and you just kind of want an adult, to stand up and say, "Okay, stop, just stop."
That's exactly what it's like, though.
Yeah.
Right? It's like kids.
It is kids.
It's like he stole my toy, and the kid stole your toy because he's trolling you.
Right.
He's doing it to piss you off, and you're getting pissed off. And now you're going to piss him, or you're going to piss some other guy off that's next to him who's seeing this happening, and he's going to blame you. And then it just feeds on itself. And you've got all these extreme people throwing like it's like monkeys that throw shit across the park. You know what I mean? Like when they throw shit at each other. And if you're in the middle, you get hit.
Right.
And then either you get radicalized, or I don't know, or you just go away, which is like what I think you and I both tend to do. Probably, I assume you do the same thing. What I do is I just withdraw from that.
I've got better things to do with my time. They get into arguments with people who, like, I'll get into any discussion you want, but getting into an argument with someone that's already made up the mind, it's just a pointless waste of time.
Another great point, right? So this goes back. You're an amazing interviewer. I told you before. I think I mentioned it again. You're just very personable, and there are conversations. There's not interviews. It's more conversations that you have with people. I want to ask you about this. I'm so turned off from the structure of interviews, the way they are done today. The classic example is like Hard Talk, right, at BBC, where it's like, what's your opinion? What's my opinion? Let's fight.
Right.
Like, fight to the death, Mortal Kombat. Yeah. Who's going to win? Why the fuck would I want to watch that? Why is that interesting? How does that offer me anything at all? I don't want to hear an argument. I want to hear a conversation, because an argument suggests that someone is wedded to a certain belief.
Correct.
Like, let's just come to a more coherent understanding of what reality is, and let's put our differences aside. We don't need to like measure who is closer to who at the end. You know what I mean?
That's exactly right. I mean, at the end of the day, when you sit down with people and you ask them for their thoughts on a subject, if they differ with yours, that's great.
That's great, because you get to learn something.
That's the best thing in the world. And I think civility has gone. You ask someone for their thoughts on something, and then they share their thoughts with you, and you want to start fighting with them and disagreeing with them. It's just their thoughts, right? It's okay that they're different to yours, but it's something I'm very conscious of. And when I have these conversations, I hear things that I disagree with or I want to follow up with, but you have to be able to do it in a respectful way, because that's respectful discourse is one of the building blocks of society, and I really genuinely feel as though that has been whittled away at to such a point that it's in danger of disappearing. And I think when that disappears, when you lose the ability to have civil discourse, you end up solving all your problems in the worst possible way by fighting. And I just think that's just not good for society.
My subtitle for this episode, Grant, I'm probably going to keep it. I don't always commit to them, but it's called Quantum Field Reports from an Adventure Capitalist, because that's what I think you are. You spend a lot of time with a lot of people that you really respect and think are really smart, and you get to learn a lot from them, right?
Yeah.
And you listen a lot, and you have conversations. And I think that all of us who get to watch you do that on Realvision now are very lucky, right? Because you do it in the way that we discussed. It's an actual conversation, and it's not combative, and it's interesting, and you're there to learn. I think that's what's really cool about what you do now. It's that you basically put a camera on while you do what you do normally, but now we get to watch you do it.
Well, I appreciate that, because that's exactly what I'm trying to do. I'm just trying to give people a chance to be a fly on the wall in a conversation. That's all. It's not an interview. It's and the series is called In Conversation With, very deliberately, because I don't want it to be an interview. I don't want it to be an interrogation. I want it to be a conversation that ebbs and flows and goes wherever it goes. I mean, I know what I want to talk about, but I don't care if I don't get to most of those questions, because we go off in an interesting direction somewhere else. And the business of finance has attracted the brightest people in the world for 50 years, because whether you're a chemist or a rocket scientist, where you're getting paid is Wall Street. So a lot of people went to Wall Street with all kinds of skills and degrees, and they've done some amazing things. But if you sit down with real finance people and you ask them stuff, and you sit down and talk to them about things, you'll hear stuff that will challenge your assumptions, that will confirm your assumptions, that will give you things to worry about, give you things to be optimistic about, and being able to do that in a comfortable environment where people get the chance to just sit and listen. The one thing that I have to say, and we've got an incredible audience. I mean, our subscribers are just phenomenal. The one thing that I will say that just drives me mad is I'll sit down for someone for an hour and a half, and then the first comment will say, "Well, I didn't get any actionable trade ideas from that."
Oh my God!
I wasn't trying to get those.
I
wasn't trying to get those.
Yeah.
I don't. There's a time and a place, and I think if you really listen to smart people, you'll find all the actionable trade ideas you want. They'll just be in your own head, and they'll be the product of that information.
Doesn't the parable, I guess it's a parable, of teach a man to fish, he can catch his own fish.
Yep.
Basically. I butchered the parable,
but
like
you did a pretty bad job of that. Yeah, okay, good. I think it's give a man a fish, he'll eat for a day. Give a man a fishing rod, and he'll eat for life.
Something like that. Whatever. So, but the trade idea is like giving someone a fish. It's like that's one fish. You're not going to get it again. It's one trade idea.
No, look, you're right. But it's. I think the beauty of what we do is we do cater for people that want.
You guys do that already.
Let's hear a trade idea, and I might disagree. I didn't think you're an idiot, but I want to hear the trade idea. For me, that's not the value for me. The value I take is from really hearing how somebody thinks. I'll come up with my own trade ideas, but tell me how you think. Tell me how you've become that person. Give me the experiences that have shaped the way you think, because that to me is like the fishing rod. I can take that and apply it to my own thinking, to situations I find myself in, and I can really use that for the rest of my life. Whereas if you tell me that I need to buy Apple ahead of next quarter's results,
where's Apple going to be at tomorrow, Grant?
Great, yeah, right.
You're not going to give us some price quotes.
I'm not going to guess about the future, but you know what I mean. And that's a useful thing for me for the next 2 weeks. But after that, it's completely useless to me. What Apple's going to be in 2 weeks is useless in 3 weeks. Knowledge is priceless.
Were there any great interviewers or journalists or people that you followed in media, either that you follow now or you used to follow, that you think about or that you've...
Man, I got to say, to me, there's people have been incredibly nice about what I've done, which is hugely flattering and humbling and embarrassing at the same time, because I'm not trying to interview people. I'm just trying to talk with them. And so I don't feel like there's an art to what I do. I genuinely don't. I'm genuinely curious about what these people think, and when I sit in that chair, I'm the audience. I'm watching the interview as I'm doing it, and I'm just fortunate in that I'm the guy that gets to say, oh, that was interesting. Let's follow up on that. I'm just trying to have a conversation that I'm genuinely interested in, and I think that genuine side of it comes through. Not just that, but anywhere today. If you see something that's genuine, in this day and age, if something's genuine, I think there's something about it that makes it stand out. And so, in a world that in many ways is so fake, just to have a genuine conversation or genuinely be interested in something someone's talking to you about is a rare thing. And I think that's why perhaps it resonates with people, is because nearly everybody's got an angle today. It's about self-promotion. It's about this. It's about that. I've said it all the time that the one challenging thing about doing these interviews is, for 4 years I've been the dumbest guy in every conversation I've had, and that's confronting, but it's fantastic, because these guys aren't learning anything from me, but I'm learning a ton from listening to them, and it's a genuine privilege for me.
Well, on that note, Grant, I want to thank you for coming on the show.
Oh, you kidding?
It was a great conversation.
Anytime. I've loved every second of it. Thanks for having me.
Thank you, man. Thank you.